This is our Forex blog for October 30th, 2012, and this is our new currency meter. The old one basically had the real-time trend strength on the top, and then underneath that we had the 15-minute trend, hourly, daily, weekly, monthly, and a lot of traders told me that it was too confusing for them because some trends were going up, some were going down, they didn't know which one to use. So this factors in all the different time frame trends and weights each one appropriate. As you can see on this, I give only 4% weighting to the monthly trend, 13% to the weekly, 18% to the daily, and 2/3 of the trend strength is very fast real-time momentum. And so basically in a nutshell, the first step of our three-step system is to find the strongest currencies to buy versus the weakest. And if the weakest currency is on the top, like the CAD is over the yen, then you want to sell the weakest versus the strong. So basically from 2 o'clock onward, one excellent one to be focusing on selling would be selling the CAD yen. So let's bring that chart up. That's the first step. Identify the currencies are most likely to trend and then trade those directions. For example, the New Zealand is strong, Australian is strong, the dollar was weak after 2 o'clock, you'd be buying the Australian dollar and New Zealand dollar. It's that simple. Okay, as you notice from the chart, our software did a good job of finding the absolute high, gave you a sell signal right at a major resistance area. It was above our upper containment bands, right near the 2.0 band, which has about a 70-75% likelihood of being the high. And as you can see, the momentum was very strong, and then as it starts coming back down, it gets extremely weak. And that was an astronomical 90 pip drop. Our counter trend signals give you an idea that this is likely to be the low, and of course it retraces back up. In using our signals, always draw fibs on the charts too, just to get a feel for where the fib areas are. Typically, after a big move like this, you're going to want to wait for at least a 38 to 50% retracement before going short. You might get some sell signals which are entirely based just on chart patterns here, but so close to the low it's a riskier trade, probably 40% likely to work. Whereas if you wait for a decent pullback to the 38, and it can be a few pips underneath the 38, here's the previous day's low, the dotted red line. The 38% in the previous day's low, if you had gotten a sell signal right here, it would have been a great trade, probably 55-60% likely. This one pulls right back up to the 50% retracement, which is also the previous week's low, major resistance area, and of course that's a great place to get in, and you can see it falls. Even if you got out with this counter trend signal right here, the low odds counter trend signals are light gray, the higher probability ones are red and green. So basically you're looking mostly for sells in this currency, and you can see it fell. This one here probably would have given you 4 or 5 pip win, 5 pip win, loss, 20 pip win, 5 break even, 5 pip win, loss. And once the market shows a lot of momentum coming back in, then you might want to wait for a 2-wave pullback. Draw your fibs on this last wave up from right here to here, and wait for sell signals up here near the first or second fib target. You can see you might have taken this one right here, lost, got in here, and it pulled back about 10 pips. You would have got your loss back. Here's the Australian dollar. This was one that you were looking for buys in. Real-time trends up, 15-minute trend, hourly, daily, weekly. You got a buy signal right here, and it went up about 20 pips. Let's scroll a little bit forward. You can see some weakness came into the yen at 9. What's one of the strongest ones? The euro. So we're looking to buy the euro-yen around 9. Now the first thing to notice is the euro was strong for many hours before the yen started to show some weakness. So in all likelihood, the euro-yen's already going up because of that. It might be already overextended to the buy side, and there might not be too many more pips left to run. But let's bring this up and look at the euro-yen after 9. Here's 9 o'clock right here. It's right underneath the hourly moving average and the point of control the previous day. Our FX trade signals pretty much looks at where the price is in relation to likely lows or in various moving averages and various statistical levels. The point of control is a key level. Underneath that, it's more likely to go down. And anytime a resistance area gets hit twice and there's no deep pullback from it, when it breaks out right here, this is a very high probability trade. For humans to detect, it's very hard to teach a computer to spot a sideways consolidation breakout when the trend is previously down. But you can see our real-time tools are showing the momentum to the upside and breaks out at 103 and goes up about 30 pips. Also, here's the previous day's high. It's a I don't like to really buy a currency that's already been going up. This is the first wave up, second wave up. Usually it only goes up 3 waves. You always want to draw your fibs on the previous swing to get an idea where the next target is. And so if you bought this breakout right here, 103.30 is your next profit target. It's only 14 pips up. So if you want to risk 10 pips to make only 14 pips, by all means do that. But some of the higher probability trades are where the next profit target is 20, 30 pips away. Then it makes sense to risk 10 pips when you're going to make 25, 30 pips. Risking 10 pips to make 10 or 15 pips is a low odds trade. But nonetheless, you got that breakout trade right here. Some counter trend signals alerting you to a possibility of the reversal. If you got into that trade, you initially put your stop underneath a low. It's kind of going sideways. You move it right up here. And when it hits that fib target and it can't get above it, you want to get out, take your 14 pips if you took that trade there. Some trades you're going to find on the charts based on our teaching videos that our systems are not going to identify, such as this one right here where it hits this resistance area twice. There's no pullback. Here's a fib area, which I spend 30 or 40 minutes every night doing fib analysis to find likely key support resistance areas. I think you might have saw it in the pound yen as well. Pound yen, this is a Fibonacci profit target level, which I thought was going to be the low today. I actually draw these centered around the middle, so I thought 127.02 was going to be the low. It actually came down to 127.04. It's only 2 pips away from my area. That's why I add a little padding around it. Anytime these fib targets are underneath the lower green band, it's very likely to be the end of the move. So you can pretty much see that was the end of the move and it shot up. That's why it's very important to watch our videos, learn all the different trading methods that we teach, and use these signals that we have on the chart as a guide when you have an understanding of how to trade to help you spot very high probability trading signals, and then you look at the momentum in real time. In other words, these sell signals right here, there's a lot of strength. You probably do not want to take them. During this pullback right here, there's not that much weakness. You got a buy signal right here, you take that. Trade in the direction of the momentum when the signals apply. I don't typically leave running currencies like the Euro CAD, so I'll just bring up a 5-minute chart. You can clearly see the Euro is strong today, the CAD was weak all day. This is going to be one that you're going to want to buy, and you can see this pretty much trended up all day. Some of the trades that I see on this, once it goes from a downtrend to an uptrend, this little flag breakout right here, basically there's 2 methods that I primarily trade when I'm discretionarily trading: pullback trades and sideways rectangle patterns. And sometimes sideways rectangle patterns come after having been in a pullback first. Like you can see, this is trending up, you get a pullback, sideways rectangle pattern, breakout. Very high probability trade. You can see it went up about 15 pips. Another pullback, sideways rectangle pattern, breakout, goes up. And every time that there's a higher high, the pullbacks, you always want to assume that the trend's still going up. Now this is this area right here barely made a higher high, so this is very high probability potential of a reversal. Once it pulls back and doesn't go underneath the previous swing low, you have to assume that the previous trend is up and get into that trade. Also, when markets are not able to get to the next fib target, that's another sign of a reversal. Notice on this first wave here, it hit the fib target. If you draw fibs off of each wave and the market's able, oops, sorry, drew that wrong. The market's able to get to the next fib target, then trend's very strong, is likely to continue. Guess what? This last move up here, the market was not able to get to the fib area. We have a double top right here, and it's still on an uptrend because it never really significantly broke these previous swing lows right here, but it is an early warning. If you got into this pullback here and it can't break the high, you want to get out. and probably avoid buying until the market at least pulls back 38 to 50% of the entire move up, which would be from here to here. And if you had bought the 38%, you at least had a chance to get out with a small profit here. The 50% is a much safer probability. You'd still be in that trade right here, only up a few measly pips, so, but you would automatically move your stop to break even, and you probably would lose, or I'm sorry, you would probably make no less than 5 pips on this trade.